Now we have this case scenario number 2, which is on section 10 AA, Special Economic Zone Unit SEZ. Mr. Suraj, aged 48 years, furnishes the following particulars for the previous year 20 to 23 in respect of an industrial undertaking established in a Special Economic Zone SEZ in March 16. March 16 it is set up. It began manufacturing in April 2016. That means in financial year 16-17. 16-17 will be counted as the first year. We know pretty well deduction under section 10 double is allowed for 15 consecutive years. First 5 years it is 100% of the eligible profit. Next 5 years 50% of eligible profit, and balance 5 years 50% of eligible profit or amount transferred to special economic zone reinvestment reserve account, whichever is lower. Now financial year 16-17 is the first year, therefore financial year 22-23 will be the 7th year. Since it is the 7th year, deduction will be 50% of the eligible profit. Now the details are as follows. Total sales 85 lakhs, export sales, that is proceeds received in India, 45 lakhs, domestic sales is 40 lakhs. So domestic sales plus export sales total is total sales. Profit from the above undertaking, this is the total profit, 20 lakh rupees. Now we know the formula for finding out eligible profit. Deduction would be 50% of eligible profit, but how much will be eligible profit, that we will find out applying that formula. Profit from the above undertaking is 20 lakh. Export sales of financial year 20 to 23 includes freight and insurance of rupees 5 lakh for delivery of goods outside India. Freight and insurance 5 lakh rupees. Now this is something which is not there in your syllabus, but still institute has covered. Explanation 1 to section 10 AA, it says that export turnover shall not include the following 4. Number 1, freight. Number 2, telecommunication charges. Number 3, insurance. These 3 things, freight, telecommunication charges and insurance, attributable to delivery of articles or things outside India. And number 4, expenses incurred in foreign exchange in rendering services outside India. Out of these 4, we have first freight, and we have we have insurance, freight and insurance. So these 2 things shall not be included in the export turnover. If it is already included, we need to remove them, meaning thereby here the export sales includes freight and insurance of 5 lakh rupees. So what we will have to do from this export sales, which is 45 lakh, from 45 lakh we will have to remove this 5 lakh rupees, and accordingly export sales will drop down to 40 lakhs. However, not only that, there was a Supreme Court decision in case of CIT versus HCL Technologies Limited 2018, based on which amendments have not been carried out in the Act. But here the argument of HCL Technology, which was accepted by Supreme Court, is that this 5 lakh rupees is to be reduced. These 4 items are to be reduced not only from export turnover but also from the total turnover. Why? Because it states that whatever is forming part of export sales or export turnover, that is a part of total sales also. If you observe, 85 lakh includes 45 lakh plus 40 lakhs. So in case you are reducing 5 lakh rupees from 45 lakhs, then that 5 lakh should be reduced from total sales also, and accordingly total sales will drop down to 80 lakhs. This is based on Supreme Court decision, which is not covered in our syllabus, but still institute has asked. Any which ways, applying this formula we will find out. Now it will become easier for us. 20 lakh rupees is the total profit. Out of total sales of 80 lakh, 40 lakh rupees is the export turnover. So what will be the formula for finding out eligible profit? Eligible profit thus will be 20 lakh rupees, the total profit, 20 lakh into 40 lakh rupees, the export turnover, divided by 80 lakh rupees. Or you can say 45 lakh minus 5 lakh divided by 85 lakhs minus 5 lakh. Eventually this will be 10 lakh. Eligible profit will be 10 lakh and deduction will be 50% of eligible profit. Accordingly deduction will be 5 lakh rupees. Any which ways, he also received rent of rupees 25,000 per month for a commercial property let out to Mr. Sudhir, a salaried individual. 25,000 is a rent. Into 12 months total rent will become 3 lakh rupees. However, this is a rental income in the absence of which will be taxable under IFHP. In the absence of any further information, this only becomes our GAV, gross annual value. We don't have information about municipal valuation, fair rent, etc. However, what is taxable is after reducing 30% of 3 lakh as a standard deduction. Standard deduction of 30% will be 90,000. Accordingly, IFHP income will drop down to 2,10,000. Well, though it is a commercial property, since it is let out, it will be taxable under the head IFHP only. When can it go under the head PGBP? It will go under the head PGBP only when assessee himself uses the property for his own business purpose or professional purpose. When he is letting it out, then irrespective of the type of property and irrespective of the purpose for which it is used by the tenant, it will be taxable under the head income from house property. 2,10,000. How much will be PGBP income? PGBP income will be this 20 lakh rupees minus this 5 lakh rupees deduction. PGBP income will drop down to 10AA deduction is 5 lakh. PGBP income will be 15 lakhs. Okay, further, he earned interest on savings bank account of rupees 12,500. Since he is 48 years of age, as given in the first line, 48 years of age, therefore he will be entitled to deduction under section 80 TTA of chapter 6A. Deduction under 80 TTA will be of 10,000 rupees. Accordingly, out of 12,500, what will ultimately be taxable will be 2,500. And he has earned interest on post office savings account of 5,500. From this post office savings account, he will be eligible for exemption under section 10 clause 15 up to rupees 3,500. 3,500. Eventually, only 2,000 rupees will be taxable. Proceeding further, based on the facts of the case scenario given above, choose the most appropriate answer to the following questions. Number 1, 2.1, compute the amount of export turnover and total turnover. Now, export turnover we know pretty well was 45 minus 5 lakh, 40 lakhs, and and total turnover was 85 lakh. 85 from 85 also we subtracted 5 lakh. It will drop down to 80 lakhs. The answer will be B, 40 lakhs and 80 lakhs respectively. We will check institute's answer also. Institute's answer is also 40 lakhs and 80 lakh. B. Our answer is correct. Second, compute the total amount of deduction available under section 10AA. Deduction we have already claimed, already calculated 5 lakh rupees. How did we get 5 lakh rupees? 20 lakh total profit minus export turnover minus freight insurance outside India divided by total turnover minus freight insurance outside India. So export turnover was 40, total turnover was 80, and this entire thing into 50% because current year is the 7th year. Accordingly, it will be 5 lakh rupees. Third point, now let's check the answer. D is the answer. Our answer is D. Institute's answer is also D. Our answer is correct. Third, assume that for the purpose of this question only for the purpose of 2.3, that Mr. Suraj established SEZ undertaking and began manufacturing in April 18 instead of April 16. April 18, that means in financial year 18-19. If this is 18-19, then financial year 22-23 will be 18-19, 19-20, 20-21, 21-22, 22-23. This will be the 5th year. Since this is the 5th year, deduction will be 100% of the eligible profit. Eligible profit is 20 lakh into 40 divided by 80. We know pretty well eligible profit is 10 lakhs. 10 lakh into 100%, deduction will be 10 lakh. A. Let's check institute's answer. Institute's answer is also A, 10 lakh. Our answer is correct. Now 2.4, compute the total income. Last question. Compute the total income of Mr. Suraj for the previous year 20-23, assuming that he does not opt to pay tax under 115 BAC. In case he opted for 115 BAC, then in this question what will matter is under 115 BAC no deduction is allowed under section 10AA. 10AA wouldn't have been allowed. So how much will be the total income? Total income, let's calculate it out. So income from IFHP will be 2,10,000. We already calculated, that is 3 lakh rupees rent minus 30% standard deduction. Then profit from industrial undertaking in SEZ area under the head PGBP minus deduction under 10AA we calculated 5 lakh. Total will be 15 lakh. Interest on bank savings account is 12,500 and interest on post office savings account is 5,500 plus. But from 5,500 we have a deduction or exemption under section 10 clause 15 up to 3,500. 2,000 only will be taxable. Of course 80 TTA will be available on 12,500, but that will be taken into account later. 14,500 will be the IFOS income. Gross total income will be 2,10,000 plus 15, 1710, 1710, 1724,500, 1724,500 minus chapter 6A deduction. We have only one under section 80 TTA, which is 10,000. So 10,000 will be subtracting. The balance NTI will be 1714,500. 1714,500. Let's just check whether this is correct answer or not. Yes, institute's answer is 2.4C, 1714,500. 1714,500. With that, this case scenario comes to an end. See you in the next video with the next MCQ.